Greetings, everybody. Welcome to Liberty Call. Today is Tuesday, February 7th, 2023. Hope everybody's having a fantastical day out there. Weird day in the markets. I mean, it was all over the place. Actually, let me bring up the daily chart here for the Dow. Very strange day that we had. The market was in the red most of the day until, what was that, about 12:40-ish Eastern time. Took a huge jump, was up... gosh, how many points here? 260 something points. Then from there, fell down 220 something points, and then went back up again and finished the day off strong. Same thing with the S&P 500 and a very similar chart for the NASDAQ. So just a very strange day in the markets. I know Powell had some comments, and we're going to talk about that in a little bit. And but like I said, just very strange. So you don't normally see that sort of volatility. Well, again, it is sort of unprecedented times, but that type of volatility under normal circumstances is a little strange. So, all right, if it's your first time watching the Liberty Call, please give me some thumbs up, likes, shares, subscribes. I'd greatly appreciate it. Let's go ahead and jump into the numbers and see how everything finished off. Dow Jones was up 0.78%, closed at 34,156. S&P 500 was up 1.29, closed at 4164. NASDAQ up almost 2%, 1.9% to be exact, closed at 12,113. Small caps are up 0.79. The VIX receded 3.96% today. It's currently holding at 1866. Canada was up 0.47. Brazil was down 0.82. Mexico down 1.32%. Across the Atlantic, Germany was down 0.16, UK up 0.36, France was down 0.07, Euro stocks up 0.09, Netherlands also up 0.09, Spain up 0.14, Italy up 0.36, Switzerland down 0.44, and Portugal up 0.28. Russian exchanges both in the red today. The MOEX down 0.21, RTSI down 0.28. And in the Asian markets overnight, some red, some green. Japan was basically flat at down 0.03. Australia down 0.46. Chinese markets, a lot of green there. The Shanghai was up 0.29. The SESE component up 0.12. China A50 up 0.14. DJ Shanghai up 0.26. Hang Seng up 0.36. And the Taiwan weighted was up 0.05%. So again, was strange watching the trading throughout the day, because like the futures overnight were in the red, and then this morning, sitting here, watching the charts, and I thought it was just gonna be another negative day, but nope, didn't turn out that way. So a little odd. So, all righty, well, let's go ahead and get into the recap for today. S&P 500 jumps on tech rally as Powell offers scant new clues, because everybody's trying to decipher what he's thinking and what the Fed's going to do moving forward. All righty. So the S&P 500 saw a jump in trading after the Federal Reserve Chairman Jerome Powell's speech on Tuesday. He offered little new information on policy, reiterating the need for ongoing rate hikes in the fight against inflation. The recent jobs report was stronger than expected, adding further evidence that inflation will take longer time to reach the Fed's 2% target. Powell stated that bringing down inflation will take a, quote, significant period of time, end quote, and the Fed will likely need to increase rates and keep policy restrictive for a while, probably most of this year, if not into next year. That'd be my personal guess. Where was I? Morgan Stanley added a 25 basis points to the May FOMC meeting, bringing the peak rate expectation to 5% to 5.25%. Bullish bets on stocks prevailed, driven by a surge in big tech companies like Microsoft and Alphabet. The AI arms race between the tech giants is heating up, with Microsoft and companies like Microsoft and Alphabet. The AI arms race, I already read that. Is heating up, with Microsoft detailing plans to integrate its AI model ChatGPT into its search engine Bing and other products. Energy was also among the leading sectors, as oil prices were supported by a weaker dollar and demand optimism led by China. In deal news, CVS Health is reportedly close to buying primary care provider Oak Street Health for $10.5 billion. Woo! All right, so that's all the news on the news front as far as the recap for today. To expand on oil surges more than 3% as Fed's Powell eases rate hike concerns. So let me bring up my notes here. Oil prices saw a boost on Tuesday with Brent crude futures rising 3.3% to $83.69 a barrel, and U.S. West Texas Intermediate crude futures up 4.1% to $77.14 a barrel. The rise in prices was driven by the Federal Reserve Chair Jerome Powell's comments, which eased concerns over interest rate hikes and recovering demand in China. Powell said that the very strong jobs data released last week shows the central bank still has a way to go in raising rates, and it will be a process that takes significant period of time. We already talked about that. The falling U.S. dollar index also helped raise oil prices. The International Energy Agency expects half of this year's global oil demand growth to come from China, with jet fuel demand surging. The halt in operations at 1 million barrels per day at a 1 million barrel per day oil export terminal in Turkey due to an earthquake and the shutdown of a 535 barrels per day oil field in Norway also boosted prices. In the U.S., crude production is expected to rise in 2023, while demand will stay flat, according to the U.S. Energy Information Administration. BP reported a record profit of $28 billion for 2022, while boosting its dividend despite scaling back ambitions to reduce oil and gas output by 2030. So, all right, so that's all the oil news. I know, and the reason I talk about it is oil affects every aspect of our life, from turning on our lights to driving to getting our food to us. So, while oil prices or energy prices are still high, we're probably still going to see a lot of inflation. And until those prices recede, I don't think everything else is going to fall in line with everything else. All right. And on the trade news, U.S. trade gap widens in December, deficit highest on record in 2022. All right, let me bring my notes up here. The U.S. trade deficit has widened to $67.4 billion, up 10.5% from November. This is a reversal of a sharp contraction seen in the previous month and is due to a rebound in imports and a decline in exports. The decline in exports is a result of cooling global demand and falling crude oil prices. The report from the Commerce Department also showed that the trade deficit reached a record high of $948.1 billion in 2022, a jump from $845.0 billion in 2021. The trade gap represented 3.7% of GDP, up from 3.6% in 2021. The decline in exports confirms the recent weakness in manufacturing, which is being impacted by higher interest rates and a shift in spending back to services. The appreciation of the U.S. dollar against other currencies has made American-made goods more expensive in international markets, further reducing demand for U.S. exports. Although with the dollar receding, and it's been falling, I think we were at a high of 110 or 111. It's down around 102 or 103. And when all this mess started several years ago, we were around 90 on the dollar index. So the dollar is appreciated quite a bit, and that's probably why, exports are not as attractive right now for the rest of the world, is because when our dollar's more expensive, it makes our goods more expensive, and then makes costs more higher for everyone else around the world. All right, where was I? However, the services surplus rose to a record high of $82 billion due to increased travel, transportation, and business services. All right. Well, that's all the news I had for today. Other than the market being schizophrenic every time Chairman Powell speaks, pretty boring day, actually. So, all right. Well, that's everything I had. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information's there. Hope everyone has a fantastical evening, and I will talk to you guys next time. Adios.